With tough financial times continuing in agriculture, some farmers and ranchers may actually face having their land repossessed. Joining us now for today's Rural Money segment is Roger McEowen with the Washburn University School of Law. Thank you so much for joining us, Roger. Let's start with some background. What is contributing to the current financial distress in the farm sector?
Well, hi, Christina. Good to visit with you today. There are several things going on that have been happening for several years. Of course, low prices in recent years have added to the problem, and so has increased debt levels as a result of financed asset purchases when times were good during the economic upswing in the ag economy. Recently, we've seen the working capital in the farm sector fall sharply since 2012. Now, working capital for a farmer as a whole, in the farm sector as a whole, is current assets less current liabilities. It's now at its lowest level in 10 years, and it's presently at 36% of its 2012 peak. And in just the last year alone, it's dropped by 18%. So there are a whole host of things that are happening in the ag sector that has caused trouble for a number of years.
Yeah, and then you compile what's going on with the trade situation as well. And so there's a lot of uncertainty. As a result, when farmers do hit these hard financial times, their farmland might actually be repossessed. Are there any special exemptions?
Well, on the repossessor's side, there is. And so the party that is repossessing the land can use a special exception in the tax code that's very favorable to them. If they have sold the land to the farmer under an installment sale, then they don't have to recognize gain or loss when they repossess the property, either in full or partial satisfaction of that debt. And it doesn't matter what method of accounting that they use to report the gain or loss from the sale, or whether at the time they reacquire the property, whether it's gone up or down in value. So it's a very favorable provision, but there are some, I would say, exceptions to that particular exception.
Okay, Roger, what do we need to keep in mind when handling interest in this situation?
Well, amounts of interest that the party that's repossessing receives, whether they're stated or not, are excluded from the computation of gain. And so you don't have to account for that in your computation. Again, another favorable provision for the party that is repossessing farm real estate.
What's the big takeaway here? What do you want our farmers and ranchers who are watching right now to know about repossession?
Well, I think the big takeaway, first of all, is if you're going to face a repossession, that you need to get good legal and tax counsel. And tax planning is not just important on a daily basis as we try to plan for the future. It's important for farmers that are also in financial distress and for the creditors of those farmers. And so good tax counsel is really important. Tax issues can become really complex very quickly, and that is true particularly in financial distress situations.
Absolutely, which is why we really appreciate having you join us each and every week to sort out all the nuances. Roger McEowen with the Washburn University School of Law, thank you so much for joining us.